Hello, and welcome to Payments Unfiltered, the podcast that gives you your much-needed dose of candid payments chat. I'm your host, Theo Spyrides, Head of Product at Primer. Now, whether you know it or not, payments sits at the heart of all of our lives. Without a functioning payments ecosystem, the world today simply doesn't exist. With this podcast, we'll be diving into this fascinating ecosystem, where we'll be delving into the stories of the people that have created it, trying to tackle the big questions and navigate which direction the payment space is heading, and of course, trying to have some fun along the way. With me today, I have Rob Moffat. Rob is a partner at the venture capital firm Balderton, where he's been there for over a decade and invested in some of the most exciting fintech startups in the UK and Europe, including Primer, Nutmeg, Clio, and Zego. Before that, he was a part of strategy teams at Bain and Google. He also has an MBA from INSEAD and a Master's of Statistics from the University of Cambridge. That is a pretty impressive CV you have there, Rob. Welcome to the show.
Thank you. Good to be on.
I'm really excited to actually have this conversation with you today because we've spoken in the past, and I know the amazing insights you have, but VCs have been at the heart of the booming fintech and payment space over the last decade. And in our last episode, we spoke to a founder, and it'll be amazing to hear your perspective from the venture capital side. So I think a natural starting point is, why venture capital?
So before venture capital, I worked at Google. The Google role was a little bit random. I was leaving Bain. I was desperate to leave Bain and find a real job. I'd had enough of strategy consulting, borrowing people's watch to tell them the time. And I started interviewing with big companies. And one of them was Tesco. And I kind of had bunch of interviews with Tesco, but at the same time managed to get this interview with this company called Google that I used and was doing quite well, but was still pretty early on in Europe. And they had like 250 people in London. It was pretty early days, pretty chaotic. And it sounded really interesting. And so I loved the culture of Google. I loved the sort of spirit of it. And so jumped in, then discovered how much I really enjoyed the tech world. I was really excited by how fast these tech companies were changing what we do and changing our lives and really having a positive improvement in a sort of stage where I think a lot of industries were sort of somewhat stagnating. I think tech continues to forge ahead and bring real efficiencies and real improvements to people's life. So I love tech. In the end, Google became a pretty big company. I got fed up with that. So it's much worse now, but it was still pretty bad back then. So I was looking for tech and I was looking for small companies. I interviewed with a few tech companies. Interviewed for the payments team of eBay or Amazon. I can't remember which one now, but so looked briefly at payments back then. But then had a couple of inbound from venture capital firms. And I thought that'd be a really interesting thing to do. A couple of years, give me some good exposure to small companies across Europe, work with some interesting people. It's always nice when you're giving money to people. They'll be really nice to you. So I thought I'd do it for a couple of years. And now, almost 15 years later, I'm still doing it. And I think you just get a little bit addicted to the meeting really interesting founders, exploring new spaces, working with some very smart people, and not having to handle managing a team or any of the kind of the day-to-day of the reality of growing a bigger company.
So you spent 7 years at Bain, is that correct?
Yeah, off and on. I did an MBA in the middle.
Okay,
yeah.
Great. Do you think the management consultancy background set you up for success in the VC world? Like, is there translatable skills that you learned?
I think there's a school of thought on social media that management consultants are terrible VCs and every good VC should have been a founder and there's nothing to substitute the experience of life in the trenches being a founder. And I have some sympathy for that. I think there is something unique you get from really having lived the founder journey and I haven't done that. At the same time, the day-to-day of venture capital, there is a lot of looking at a new business, analyzing it, understanding the markets, and that is classic kind of MBA consulting skills. And so when we recruit now, we do look for people to have some of that business type background, whether it's an MBA or consulting or banking or some sort of internal strategy role. It does normally help. These days, I think we can also look for people who worked in startups or ideally founded startups. And I think that's a perfect profile now for VCs. You've got that empathy of being a founder, but you've also got that strategy kind of thinking rigor.
Do you look to get a balance in the team between different backgrounds to make sure that you're not kind of overfitting to one perspective?
Yeah, no, it's really important. So we have 9 partners. 2 of my partners started their own business. There's a few of us from big tech companies and a few from more of an investing background. And I think having that balance is important. And the same for the rest of our team.
That makes sense. So you joined Google in 2007, and I believe you started interviewing just before the turn of the year, at the end of 2006. Which was the same time that YouTube was acquired. I was wondering if you had any experiences or kind of insights into what Google was like acquiring what is the second most visited website in the world, which is youtube.com.
It's quite a humbling lesson. I think YouTube now has become a huge revenue driver for Google. At the time, the kind of internal view was like, what do we do? We just bought this site that burns money, that makes no revenues. And actually, the first project I was given when I joined Google was make some money out of this damn thing. We had no ads at all at the time.
Oh, wow. So you were looking at YouTube.
Looking at YouTube. I was like, how are we going to make some money off this? And so and it's classic. There's a bunch of creators of YouTube who didn't want to damage the user experience at all. So they didn't want the pre-roll ads. They didn't want ads in the video. So the only thing we could do was sort of mess around on the side of the video. And that was crap ad inventory. So we really struggled to sell it. We're trying to do like a big exclusive deal with one of the agencies. So it was very slow. This was 2007. We got the revenues were still negligible. It took a while to build. Obviously now it's a behemoth.
And when you see what it is now versus what you were hoping it could become, like how accurate were you?
Oh no, I was completely wrong. I was far too pessimistic. I was too pessimistic on Google full stop, and I was much too pessimistic on YouTube.
And you've mentioned a few times in other interviews you've done, and you kind of touched on it now, about being frustrated by a big company. Do you mind kind of delving in a bit deeper? Like, what was it that was so frustrating?
Meeting overload is, I think, the biggest killer of big companies. You find your Google, everyone's calendar is open, so everyone just books in meetings for you, and the default is book in a weekly checkout meeting and invite anyone who might be relevant. So suddenly you're pulled into meetings sort of from 9 a.m. to 6 p.m. every day. And then you're trying to do some actual work around that. That's one piece. There's gatekeepers, so everything has to go, like anything significant when I was at Google, I had to go through Larry and Sergey. So there was a sort of, their staff meeting was where any product change would need to go through. I remember I worked on Google's attempt to do price comparison. So Google did a sort of money supermarket style price insurance price comparison business. And I sort of went off to San Francisco to present that to Larry and Sergey, and they were completely uninterested. They were like, what's this boring UK financial thing? Like, no, we're not doing that. And that was after months and months of work with lots of people's time. And then you're trying to run it through an exec who doesn't really care. They're interested in what's the big moonshot project, not about making a bit more revenue in the UK.
Interesting. So you've met the co-founders of Google. How do they stack up against some of the founders that you speak with? Are they the bar? Or
it's tough. I was there in a meeting with 12 other people for 45 minutes. So I wouldn't claim I spent as much time with them as I spent with Gav. I mean, they're phenomenally smart, both of them, and able to context switch very fast. And yeah, I think they make good points. I think they were, at the time, Larry was personally reviewing every new application to Google. And I think that's a good discipline to have, that it forces everyone to make sure every new hire is exceptional. Otherwise, and there was some arbitrarily turn people down, I think, just to force that rigor in recruiting, for example.
I did some research into maybe a fun question on Google. So do you think you can guess what the most searched word was in 2007 on Google when you joined?
Google.
No. American Idol.
American Idol.
Yeah,
wow.
Which is bonkers, and YouTube second.
Yeah.
But I actually thought what was most interesting is I actually went down a bit of a rabbit hole and looked at every year since there. Yeah. And it's kind of like you can track history looking at the most searched words on Google and what was the most popular culture thing at that point in time.
Nice.
I thought was
the history of pop culture.
Exactly. All through Google search.
Google Trends it's a rabbit hole. You can spend hours looking at stuff.
Absolutely. So you kind of touched on it. When you left Google, you were kind of interviewing at other startups. You kind of went into the VC world. What was it that drew you to Balderton?
What I like about Balderton is, at the time it was really about the partnership and about having someone like Bernard, who's founded a $7 billion software company, and a guy called Tim Bunting, who was very deep in the financial fintech area. So having that kind of quality of partners, and then an established brand that has been investing in European founders since 2000. So having that history, a firm that actually really knows what it's doing, has been through a couple of cycles.
And I think I heard you say in another interview you've done that your plan was always just to go for maybe a few years and to leave to do your own startup, perhaps. You've been there for 15 years.
Yeah.
So what kept you around?
I failed. No, I bounced around a few ideas in the past. We were just speaking before this about the importance of having a great tech co-founder if you're going to start a company. And I sort of became very aware of that. Honestly, I never found that person. So I think that's the sort of why not. But I think the bigger was why stay at Balderton, and really enjoying the job, really enjoying working with great founders, really enjoying the sort of project of building Balderton. I think we're a much better firm now than we were when I joined, and sort of being part of that building process. So it's not the same as building Primer, but we have gone from 30 people to 65 people. We're managing 4 times as much money. We've expanded into European offices. So there is a growth story there, which is quite fun to be part of.
That's super exciting.
So being able to be there at like the first round of companies like Revolut, back when it was a handful of people and we got one of the first cards, and then seeing that amazing growth is a great journey to be a small part of.
And you joined just after the financial crisis in 2008.
Yeah.
What was it like being a VC after such a seismic event in the financial world?
Yeah, the first year was quite brutal, actually. I joined late 2009. There were a lot of down rounds. There were a lot of inside rounds. I remember sort of modeling cap tables to try and work out how you sort of filter through people's liquidation preferences. And we did not make a huge number of new investments in 2010. So it was a bit more like the sort of 2023 environment. But the great companies came through that. And so I think that kind of lesson of, these are super impressive companies. What is it that makes the founders that can come through difficult times? It was a very different funding market then. There were really only 3 firms, us, Accel and Index, who were deploying into European tech companies. So it was a very small ecosystem. So everyone came to us. We didn't have to make an effort to get out there and find deals. But there wasn't enough quality and there weren't enough great teams.
Makes sense. And you obviously invest in payments and fintech. So I guess, how did you end up investing in payments and fintech companies?
So when I was at Bain, I spent most of my time working in financial services. So I had a bit of that experience before. And then at Google, I worked on this price comparison side. That was my last year at Google, really was focused around that. So I had a bit of prior experience. We had invested in some of the early fintech players. We invested in a couple of payments businesses, one called 3V, aggregation business called eWise, Zopa, the first peer-to-peer lender. So we had some sort of interesting early fintech investments, not ones that became very big, but I think good learning. And then a lot more started to come through. So I think payments has been around for a VC investing category for 20 years or more. That's always been investing happening in payments and people making money. But everything else around fintech, I think, really started exploding after the GFC. I think the lack of debt available created a real opportunity for debt providers. I think people got fed up with paying 2% plus 5% for wealth management, and so we're looking for new providers there. Neobanking enabled by e-money. There was a lot of sort of changes which really enabled a wave of interesting fintechs.
Would you say that you're like a payments expert, or like where do you kind of rank yourself on the payments expert curve?
Payments is humbling. Every time you think you understand payments, someone comes up with a new acronym, and you're like, "What the hell is that? I've never heard of it before." I think I know more than most VCs around payments. I know a lot less than people who work in the industry day to day.
And how did you learn?
Mostly speaking to founders. Obviously, reading and listening is important. And there's a lot of good guides out there, and lots of people have sort of written their kind of 101 guide to payments. But I think what I really learn is the thing that's not written down is from talking to great founders. Occasionally speaking to the providers. We're invested in some big retail businesses, and so hearing it from their perspective is quite interesting. But a lot is from the founders.
And is this something that you continuously try and educate yourself on? Is it like an ongoing journey, or do you feel like you've got the critical mass of knowledge that's needed to kind of invest in the space?
No, it's very ongoing. It's my biggest frustration is I don't have enough time in the week to spend more time reading and learning. I think I like to write about what I'm learning, and I don't do that often enough because there just isn't enough time. But that's my biggest frustration is being able to sort of synthesize that and get to more of a thesis.
Talking about your writing, so you're a bit of a BNOC, which is a big name on campus, and an active contributor to the fintech space. So I'm not sure if you know how many Twitter followers or X followers you have. Do you have it?
No.
20, basically just shy of 25,000, which is pretty impressive. And you have 7,500 followers on Medium. Why are you so active in contributing to the kind of the news cycle in the space?
I really enjoy writing. I really enjoy the process of putting down on paper what my thoughts are. I find it really clarifies my thoughts. And so it helps me get a view on what's interesting out there. Also, I think it helps get people to come inbound. And I think what I love is I've written an article and then I get some inbound from an interesting founder saying, this is exactly what I was thinking about. I wrote a piece recently around the grey pound and how people are neglecting sort of over 55s when they're looking at fintech. And it was interesting what that came up with. People I'd never heard of before sort of reaching out and saying, yeah, I started a company in this area. Can we chat?
I actually read that in preparation for this, and I saw your call to arms at the bottom. So
yeah.
if you're looking to grow in the space, let me know. What is that your kind of expectation? Is that you're writing as like a way of getting inbounds, or is it kind of you want to be a contributor as well? Because it sounds like there's a bit of both there.
There's a bit of both, yeah.
Is there one that takes precedent?
No, I think it's a bit of both. I think I'm not going to significantly move on the conversation, given there's people who are real experts looking at this. But InsurTech, I started looking at InsurTech a decade ago and sort of spent a couple of years really focused on sort of trying to drum up excitement around InsurTech. And I think that probably did help a little bit just to encourage a few more people to look at this weird insurance market.
I also saw you wrote a recent article around the exploding term sheet, which I thought was really interesting. It's not often that you see such candor from a VC perhaps around trying to take away one of their levers for pushing founders to make a quick decision. I thought that was pretty interesting.
Yeah, no, I think it's crazy that the idea that a venture capital firm turns up and they spend weeks getting to know a company or years, hopefully, and they're really excited by it and they love it. And then they say, here's our offer. You have 48 hours to decide, take it or leave it. I just find that a really weird way to try and sort of complete a relationship and to force a founder into making this very short decision on something, an investor that could be with them for 15 years, potentially.
Do you think that's different because you invest in the slightly earlier rounds versus maybe like a Series D, E? Or do you think that actually this principle should apply to kind of every round?
I think it should apply to every round. And I think what we're seeing is, the Tigers and the Additions and people like that was their style. Even for these big late rounds, they were doing these exploding term sheets, which makes even less sense the later you invest, when you really should be doing some full due diligence and really understanding the company. And that's come back to bite them, I think.
So over the past decade, you've obviously witnessed like billions of dollars of VC money going into payments and fintech globally. Do you think the investment has had the desired effect and the ROI that you'd expect?
I think the nature of venture is it's all about the outliers. What are the exceptional successes? And so you look at Stripe, you look at Adyen, you look at Checkouts. Going back, you look at PayPal. I mean, the outliers are there. So I think as a sector, it's been a good returner for venture capital. I made a lot of money for founders and employees as well. So I think it works as a sector. That's why people continue to throw money at it. The challenge is it's become quite a mature sector. And I think people are looking, particularly in sort of 2021, 2022, people are looking for how do we grow super quick and what's the kind of the shortcut? What's the cheat code? And so you saw people throwing money at companies that they thought were growing in a super exciting way, like some of these one-click checkout type businesses. And then realizing actually payments is really hard. And people can a little bit sort of juice their revenues and sell a story. And actually the reality is building a great payments business takes a lot of time. Stripe is still a private company. what were we saying, 12 years on, 13 years
They
on?
founded 2010.
Yeah, 2010. So yeah, 14 years
Yeah.
on. It takes a lot of time to build something really big. We're invested in Prime, we're invested in Go Cardless. It takes time to build those businesses.
Yeah, I agree. Do you think it's added too much complexity for customers and merchants, or do you think that because we were discussing earlier before this around fragmentation,
Yeah.
you now have so many options as a customer. You have buy now, pay later, one-click checkout, digital wallets, your card. In other regions, there's kind of open banking that's more prevalent than the UK. Do you think that's like overcomplicated, or do you think that's just the natural kind of outcome from all this investment and innovation?
I think it's a natural outcome from the innovation. I think you're going to see this explosion, but then it needs to simplify. And you look at some retailers now, and the checkout page is a complete mess. There's every single BNPL, there's some open banking providers, there's a couple of different card providers, there's some sort of Visa opens something that no one understands. It's just a complete mess. And so that needs to simplify. And you look at the best retailers, look at an Amazon, that's not their payments experience, right? They really focus on simplifying it. So I think from a retailer side, it's about having those complex trade-offs of conversion versus costs, and so managing the right level of complexity there, while also realizing people have preferences. And I think once you got used to using PayPal, that's what you like to use, and so it's hard to sort of switch off those users.
100%. There's actually a survey. There's actually a few that say the same number, which is a customer will not convert more than 50% of the time if their preferred payment method isn't there, which I find fascinating.
Wow. Yeah. There's a lot of strong preferences there, right? Which is why I think things like open banking have taken so long to take off, because, there's a lot of inertia.
And also I think payments has enabled people to grow into different regions very quickly with all the innovation, which means that the competition's higher, which means that people can be pickier with how they pay and that kind of conversion, which I think is kind of interesting.
It does vary depending on what you're paying for. So if you are pushing for a remittance, you can sort of push people to whatever channel you want, and they want to make a remittance payment, they'll do open banking if you ask them to. Whereas if it's buying a sweater and it's like a spur of the moment thing, if there's a little bit of friction, they just move on and don't bother.
Completely agree with that. So we've touched on open banking a little bit. I was actually hoping we could kind of double click and go a bit deeper on it. So you've obviously been in the VC world for fintech and payments, the entire journey that open banking kind of came as a murmur and has developed into this beast. When did open banking first get onto your radar?
Well, I guess, we invested in a company called eWise back in 2010, which was more of a plaid type company. So it wasn't a government mandated open banking scheme, but it was a concept of how do you aggregate data across banks. And so that was when we first saw the concept of that. And that didn't work as a standalone company, but it's now part of the big US company whose name I'm blanking on, the big open banking payments side. Anyway, so we were aware with eWise of the sort of the first wave of these players trying to do aggregation across banks, and then I started to see the government legislation and sort of pushing open banking and talking to people like TrueLayer and Tink in the early days. We actually have a co-working space in the Balderton office called Launched at Balderton. TrueLayer started in our co-working space, so when it was just the founders, they were hanging out in our co-working space. So it was great to get to know them really early on and follow their journey.
That's interesting. Did you end up doing like an investment round?
No, we never invested in them, which is a big frustration. And it's a long story, but a couple of bad decisions on our part. But yes.
We'll save that for when you come back next time.
Yeah, exactly.
So do you think, like, with the potential of what open banking has had this entire like 10, 12 years that it's kind of been a concept, do you think it's achieved its potential? And if yes, what do you think are the biggest levers for that? And if no, why not?
No, I think it's nowhere near achieving its potential. Every year it's been, next year, open banking is exciting. And I've probably said that a few times. What I have heard, though, is that last year it did start to really get meaningful volumes. Still a lot in financial use cases. So it's wallet top-ups, it's remittances, it's investing perhaps, even paying your tax. Not so much in retail, but it is finally starting to get some traction in the UK and to a lesser extent in Europe, which is good. It's finally coming through because the benefits are clear. The merchant gets their money faster. There's less fees. It's just a simpler way of making a transaction. I think the challenges have been recurring payments, variable recurring payments, and not having good facility to do those. There's a challenge around fraud and how do you avoid fraud, and no one's really sort of figured that out. There was a challenge around how you process returns. I think people have worked out workarounds for that piece now. But I think, yes, it's the fraud piece. I think it's probably been the biggest part.
I completely agree. And it's weird. It's actually like bank transfers as a payment method is growing in so many regions. Ideal in the Netherlands, it's the go-to payment method. Pix in Brazil, crazy
exactly.
growth in like 2-3 years. The UK and just hasn't seemed to have that adoption yet.
Yeah.
I'm still trying to figure that one out. But do you have any ideas or thoughts around conversations you've had? Is why are we were very early on the concept, but we've been late adopting it from a kind of consumer perspective?
I think if you look at that European successes in Netherlands or in Scandinavia, I think it's because the banks have been really supportive of it. And we haven't seen that in the UK. The big banks have done zero to support open banking. They see it as a pain, right? It was initially inflicted on them as a CMA measure on the big banks to force them to open up their data. So to them, it's always been an anti-big bank thing. So they wanted to fail. I think political support has evaporated, and there's not a lot of political support. They're sort of winding down the open banking executive, which is unhelpful, and talking about different approaches now, talking about central bank digital currencies and these kind of things. So there's lots of political support. At the same time, it is starting to come through because it is a more efficient way of doing payments. And I think that's the nature. You put a lot of effort in, and then maybe 10 years later, it pays off.
It's time to get to know Rob a little bit more with some quick fire questions. So Rob, I'm going to ask you 10 rapid fire questions, emphasis on quick. You've got to answer as fast as you can, okay?
Okay.
All right. Early bird or night owl?
Early bird.
Tea or coffee?
Coffee.
Favorite payment method?
Open payments.
Fintech or insurtech?
Ooh. Fintech.
Favorite holiday destination?
Greece.
In-store or online?
Online.
Book or film?
Book.
Restaurant or takeaway?
Restaurant.
Favorite computer game?
Civilization.
Great one. And one thing you change about payments?
That should be an easy one. Payments is software, not financial.
Fantastic. Thanks very much. You're currently on 12 boards. Is that correct?
That's correct, yeah.
Okay. We obviously know which one's your favourite, so we won't have to embarrass you.
Yeah.
What do you see your role being as a board member or board director, and what value do you think you bring?
I think there's a formal role of the board, and so you have to fulfill that. So there's a governance piece, and I think companies having good governance is important. It's maybe not the most exciting thing, but making sure that you do stock grants properly, that you have a remuneration committee, that you're getting to a company which is at some point going to be a company that can go public. So having good governance is important for that. So that's the small, boring part. I think what's much more interesting is at best, you're a coach for the CEO. You can be there, you can be their advisor. You're not fully independent. And so a lot of CEOs have an independent coach as well, or even like a sort of therapist type relationship. But I think to have someone who is a significant owner in the company and who has a lot of relevant experience and also is really invested in the company and there for the whole journey, I think having that kind of coaching relationship can be really helpful. And that can be providing what's asked from the founder. So the founder will ask for, do you know a great head of delivery? Do you know a great head of tech in the US? So providing candidates, it might be introductions, using the network. It might be a question around strategic choices. So how much should we invest? Is this the year to go to the US in a big way or not? What should our organization structure be? Some of that I can handle. Some of that I go to our platform team. So we have experts in marketing, talent, finance, etc., who we make available to the portfolio. So I can bring those in as well. And then part of it, I think, should be what the CEO is not asking you, that you'll have a good up-to-date view of the company and you can make suggestions and say, and not too many. There's nothing worse than a board member who's throwing out lots of emails and sort of taking the pigeon approach of going in and shitting all over the place and flying out. But occasionally there's something that's probably being neglected that we should be thinking about more and so making the push around that.
And do you think, because you obviously do kind of more of the earlier rounds, does that relationship change as the company gets maturer and has more investors coming on board? Or do you try and keep that relationship constant because perhaps you've been a part of the journey earlier
Yeah.
and to kind of have that rapport, that relationship with the founders?
I think it's something you need to build it in the first couple of years of when you invest. I think that's the crucial time to build a relationship with the founders when you are their Series A investor and their board is 2 people. And I think that's a really important time to build that relationship. So yeah, when I first invested in Primer, I think I was the only board director for a time. So it was me and Gab and Paul and a couple of observers from Seed Camp and Speed Invest. So and that's when you really build the relationship. I think it's important to maintain that. And our aim at Balderton is to be there from seed through to IPO. So to be there as a confidant to the CEO all the way through the process.
And do you think there's a ceiling on the number of board seats an investor can have?
Yes, there is. That being said, not all board seats are the same. So some companies you spend a lot of time doing podcasts, kind of spending a lot of time on stupid questions. Other companies, it can be a bit more hands-off. And to be clear, I think the bigger a company gets, often there are periods where they don't need a lot of input. They're going from 50 to 80 million of revenues. They're doing well. They have a great exec team. At that stage, you really need to sort of step back a bit and just give the company some freedom. Maybe you get more involved around the IPO type discussions. So yeah, it's definitely sort of more advanced companies where I spend less time now.
So your fellow partner at Balderton, Rana, she recently said in an interview, and I'm paraphrasing slightly, but boards don't run companies, management teams do.
Mm-hmm.
We just provide advice that may change the direction by a couple of degrees in hope it changes the outcome of the business.
Yeah.
So I was hoping you could maybe share with us some advice you've given a company that's changed their trajectory.
Board member of a company called PlayPlay, which is a software business. The big question for PlayPlay was how to go about doing the US. And there's 2 French founders. Their initial view was, we'll hire some people in the US and we'll do it incrementally. And I think that's something from our experience really works. It's really important. If you're going to get somewhere in the US as a software business, you need a founder to be out there. You need to get that DNA across from your success in Europe. And you need to hire great people locally. And that's always a process to go through. It shouldn't be that hard. It shouldn't require you to move to the US to build a good US business. But the reality is shown over the last 20 years, that's almost always what it takes. And so I think giving the founder a lot of advice around that, a lot of discussions, really hearing them out. And then also connecting to other CEOs who've been through the same process, I think over time sort of changes the mindset and then led to sort of one of the founders going out there.
That's amazing. Yeah, super interesting. Great to see the value that boards bring. I think it's kind of the hidden value in investors, I feel.
Yeah.
I don't think it's discussed nearly enough. So I appreciate the insight.
It's very easy. If you take the mindset that boards are a waste of time, then they'll be a waste of time. And if you are looking for an immediate ROI from your board, you're not going to find it. Obviously, I'm biased, but I believe there is a long-term value. And I think history would show that. I think we had a period of a couple of years from 2020 to 21 when people ignored their boards. And that led to some really bad outcomes. I won't name names, but there's some companies that have now gone bust that had an absent board. And I think that was really unhelpful.
I also heard you say in a recent interview that good VC should challenge assumptions and have flexibility of mind, which I thought was very succinct and poetic. Is that something that you arrived at organically, or is that like a mindset that you've had kind of from day one entering the space?
I think that definitely was my mindset coming in. I think it's the challenging piece. Actually, I think both of those you can lose over time. So I think if you're a VC, you challenge a founder, normally they're going to challenge you back and you're going to have a bit of an argument, especially if it's one-to-one. If it's in the board, even worse, then they'll have an argument and be pissed off with you for having an argument in front of the board. But I think it's really important. I think you can be intimidated into not challenging founders. I think if you don't have some challenge, you're not having a good relationship as a board member. And the same is on flexibility. I think it's easy if you do VC for too long to get locked into certain ways of doing things and to certain mindsets. And it's like, to have this success, you need to do A, B, and C, because that's what I've seen in the last 5 companies I've seen do this. But the world does change. There are always exceptions. Great founders always break the norm. And so you need to be open to that.
So I'd love to kind of tap into some of your skills as a VC, if
Mhm.
that's okay. So what is your process when investing in a business? And that's a very broad question, but what are the types of things you look for? Is it an idea? Is it a founder? Is it a bit of both?
Yeah, so it's idea plus founder when we're investing early, and then we're investing a bit later. Then it's idea plus founder plus clients, product market fit, etc. So Primer was more about ideas and founder. So we had the idea of sort of payments automation was kind of an interesting idea, and we'd explored it and talked to a few companies about it in the past. And so we had enough knowledge to think, yeah, there's something interesting here potentially. And then I met Gab and Paul and was like, okay, they really understand it, and they sort of brought together what was sort of a fuzzy notion in my head into like, okay, this is a really clear idea, and a great pair of founders to go after it. So that combination. Yeah, we're looking at later stage business now, and they have a couple of million of revenues. They have a bunch of clients, and so it's speaking to clients, hearing why it's an exceptional product and why it stands out from what else is out there. That's really key. You can obsess around metrics and growth and NRR and all these kind of things. And the later stage we invest, and the more those matter. But when we're investing early, is a great idea, great team in a big market, building a really exciting product.
And you've got a master's in statistics from an amazing university. I have a joint honours maths degree, and I always try and be as analytical as possible. But is there a secret formula that you're working away, trying to figure out for like the optimum investing strategy, or do you accept it's a bit of an inexact science?
I've had to reluctantly accept it's an inexact science. One of the big things is founders, and how good are the founders, and we've tried to quantify that. We have more of a sort of scorecard we apply to founders, but the reality is you look at all the great founders, the outlier founders, and they're all pretty different. There's a book written about them, I think, Outliers. And yeah, they have very little in common apart from a certain level of intelligence minimum. That's about it.
Okay. And I've heard in a previous interview, or maybe in an article you wrote, that you don't like being pitched. You like having a one-to-one conversation, or at max a 1 to 2 if there's 2 co-founders.
Yeah.
Do you mind sharing like why is that the case?
I think I learn a lot more about business by having a conversation around it. If I'm sitting back and being shown 50 PowerPoint slides without any space to say anything, then I just get a rehearsed pitch. And if people have rehearsed it really well, then it will look slick. It's kind of the Y Combinator effect. There's sort of this very slick presentation. And you're like wowed at the time, and then you think, actually, was there anything really behind that? Whereas if having a conversation, you can almost arbitrarily pick one area and go deep to find out, are these founders really deep in this? Do they really understand the product challenge? I think you learn a lot more from that.
And how many new startups do you see a month? Like, what's the volume? I imagine that fluctuates. The markets a bit, but
it's up and down. And probably less now than when I was sort of a more junior investor in the team. But I like to see like a couple of new companies a day. So that's probably 10 a week. So over a year, that would be about 500 companies.
Wow, that's a lot more than I thought.
So, and that could be just a half-hour Zoom call. I'm at a conference tomorrow. I've got some 15-minute back-to-back slots. So that's a brief intro. But yeah, I think that's really important to do this well, is you need to be meeting a lot of companies. You get a sense of what's out there and what's interesting.
And do you pick a trend, like let's say open banking?
Yeah,
you've talked about it. Do you pick like, okay, well, we think these 3 companies are like probably the best bets for that theme that we think is going to take off, or that kind of subsection of the market will take off, or do you kind of just try and spot pick the best companies, and you kind of you care less about the subcategory that they're operating within?
We try and look at industries and take a more industry approach now than we used to. So back when I started, it was much more opportunistic. So it was have a good network, people send interesting deals to you, and you work out if they're great founders or not. Now we try and be a bit more, we're a bigger team now, it's a more competitive market. I think it's really important to have a clear thesis on an area. And so we'll look at, for example, open banking and spend time try and talk to all the players, get a view of what's going on, what are the kind of trends, what could be a winning approach. That doesn't mean we're going to make an investment in the area. Often we won't, right? We'll do a lot of work and we'll end up not making an investment, but maybe we'll come back to it 2 years later, and then there's another interesting player that comes through, and that leads to us making an investment. Okay,
so we're sat here in London. Balderton's obviously got, I'm not sure if it's the main office.
Yeah, main office.
Main office in London. How do you think London competes in the fintech and payment space globally?
So I think London was a great place for the fintech revolution because you have a lot of financial talent. You have from the banks, obviously, you have early players like WorldPay. So some interesting people coming out of that. You have a good venture ecosystem, you have a good tech ecosystem, and you have all of that in one place. And I think that continues. I mean, you have, sort of the Revolut, the Monzo. These are really interesting, impressive fintech businesses being built out of London. So I think, the UK can be excited about that. At the same time, Paris is doing a good job at catching up. Berlin, to some extent. Stockholm has always had interesting payments companies.
Klarna and others.
Exactly, yeah. So, and Tink. And so, I think there are a number of ecosystems, and there's high-profile companies getting funded across Europe now. And so that's part of our job as a European VC is to get out to all the different centers and make investments from Istanbul to Helsinki to Lisbon.
And why do you think Europe's doing so well and punching above its weight in this space versus like the US? So the US, everyone knows Silicon Valley, it's an investment hub, but I'd argue, maybe you'll correct me if you disagree, that actually pound for pound, the US market actually doesn't seem to be driving as much of the payments revolution as much as Europe has.
Yeah.
I think we've talked about Klarna, Revolut, Monzo,
exactly.
Wise. All of these companies are coming out of Europe and not the US. So why do you think that Europe's doing so well pound for pound against the US in the fintech space?
So I think Europe is a more fluid and more interesting payments market. I think the US is quite set in its ways. Right? It's credit cards are so dominant in the US. There's still use of checks, right? Paper checks are still a thing in the US, which I find incredible. So I think the US in terms of financial services is quite set in its ways and quite sort of slow to change. So that's one piece. Second piece is a lot of regulations in the US vary state by state. So US is really 50 markets, whereas the EU is one market. UK not anymore, sadly, but EU is one market, so it's much bigger than any of the individual US states. So I think that's quite interesting. And I think in general, European venture returns have been better than US venture returns over the last 10, 15 years. And I think that's because there are more people going into venture, more people in small companies, I think. So doing something more innovative and really sort of pushing for change. And that's what keeps it exciting.
I completely agree, by the way.
Yeah.
And the one thing I also thought about is how Silicon Valley was this like big culture and almost mythical in the UK in the early 2000s. And it's almost like we've been lagging building up our like tech hub.
Yeah, exactly. But Silicon Valley, there's not a lot of banking around Silicon Valley, San Fran. That's not that talent pool. That's in New York, and the New York tech sector is not super exciting.
So you've obviously had a front row seat to payments and fintech over the last 15 years as an investor. How have you seen it change? Like, what would you, if you had to pick one big theme that you've seen evolve over time, like what would that one big change be?
I think one big change has been an understanding of balance sheets. You go back to fintech, even 3 years ago, there were a lot of investors who didn't understand about lending, about balance sheets, about and the difference between cash flow and EBITDA because they hadn't seen this before. They backed software companies or to some extent payments companies that EBITDA was cash and it was very simple. And then they had to get their head around licensed banks and insurers and cost of capital and things like that. So I think understanding of that and people sort of knowing what they're doing. And then the second piece is, when I first started doing venture, the only really interesting fintech companies were payments businesses. And now there's interesting fintech companies across everything from asset management through to investment banking. And so it's good to see that variety of interesting companies.
Absolutely. And how do you think, like, has the VC model changed over that time as well? Like, does it have to evolve to keep up with like the changing market and payments and fintech?
I think there's been a lot of change in the VC market. The question is what's been successful change? And it takes so long in VC to prove whether something has worked or not. It could be a 12-year fund, so you're not going to know the returns of that fund for 12 years. And sometimes it's just a better time to be investing. So everyone does better. If you're investing like the early 2010s, that was a great time to be investing, and most funds right then have done well. So you've seen these big investors going in and throwing a lot of money at companies early. You've seen very active seed funds. But you look at who's got the lasting track records of good returns, it's still the traditional VCs. It's us, it's Sequoia, it's Benchmark, it's Index. Those are the people with really consistent, strong returns.
The one thing I've kind of admired from Balderton from a distance is the community that you're building. I mean, I've met you at a couple of events that Balderton host, and you mentioned having kind of executives in residence, EIRs, that we get to speak with and pick their brains on, which is great. I also know that Balderton hired the head of product in 2022. That felt like a new thing.
Yeah.
I'd love to kind of understand the thinking behind that.
It was a high cash fee as our first product manager at Balderton, and to reflect the fact that we use a lot of software tools now, and so being able to bring that together and try and bring some integration rather than having a CRM and then a bunch of different research tools and this and that. So how do we make all that fit together for us? To have a product manager to coordinate was quite important. Before that, we had data scientists. And there's a lot of interesting data signals in venture, and you can really use data to inform your sourcing of companies, to surface interesting companies, looking at open source traction, for example, but also to diligence companies and understand how they're doing versus competitors. You can look at credit card data, for example, and look at how fast companies are growing. So there's a real data play. And there's room for that kind of data science. The reality is, people have said we're going to change VC with this. I don't think that's true. I think the data is too imperfect, it's too imprecise, it's too incomplete to really dramatically change venture, but it's become table stakes to have a good sort of data understanding as a company. Where I hesitate is other firms who've built development teams of 15 people and gone off and built their own software and given it names, and that feels over the top, right? We're not at heart building a unique piece of tech. Every venture firm needs roughly the same stack. There's some very good third-party software out there. What you need is someone to buy the best and integrate them. Interesting.
I love the idea that you're kind of productizing the experience of being an investor at Balderton and bringing the tools together and thinking about the journey. I think that's a really cool angle for sure.
When I started, we had nothing. We didn't even have a CRM. It was an absolute joke. So it's good to see now that we have a relatively integrated, useful set of tools.
Amazing. Okay, so last question. It's a payments podcast, so you won't be too surprised by it, but you obviously are talking to, I think you said 2 companies a day, which is crazy. You're obviously seeing a lot of new things, new ideas. What do you think the future of payments is?
Payments should be a software. From the user side, payments should be a software business, and it should be something you build into your software stack along with all the other bits of your product. So that from the user side. That being said, there's always going to be a financial aspect to this. Fraud is always going to be an issue. Cost is going to be an issue. Balance sheets, foreign exchange are always going to be an issue. And so really there's going to be a sort of software layer to the client. And then there's going to be a bunch of smart tools to really handle that abstraction piece. And for something like foreign exchange, I think it's just about pushing down costs and making it as simple and low cost as possible. Something like fraud is a trickier challenge. Fraud will never go away. It's just about how you do it in a fair way where people are avoiding it as much as possible, but the ecosystem works together to really try and sort of squeeze out fraud. I'm not sure what the answer is on that, but that's a really interesting piece to keep pushing on. But yeah, so I think there's a software layer to the client, and then there's a bunch of sort of best of breed solutions underneath who are doing fraud or FX or treasury or whatever it might be.
The fraud piece is such an interesting one. And this is something that I just talk about all the time with merchants at the moment. And it feels very much like there's a seesaw going on between you need a barrier of entry being high enough to catch legitimate fraud.
Yeah.
But you don't want it too high because it will kill your conversion rate.
Exactly.
And so it's not as simple as, okay, every piece of legitimate fraud we have to stop.
Yeah, no, exactly.
So it's this constant trade-off, and there's actually no tools out there at the moment, although we are working on it, to help solve that equation. And I think fraud is I think we were talking about this earlier. There's not that many new fraud startups, for example. It feels a bit kind of untapped.
Yeah, it really does. And there should be more. I think you look at the AI, it should be able to bring some really smart approaches to fraud. And yeah, we're invested in Comply Advantage. They see some interesting thing around sort of transaction monitoring. So for that little piece of fraud, and there's some sort of smart AI approaches, but yeah, there's little going on.
Amazing. And then obviously you mentioned earlier, but kind of fintech for more of the older demographic is kind of untapped. Do you expect that to be a growth area, or is that a wish and not a strong conviction?
I think on the wealth management side, it's changing. So you're seeing the traditional players like St James's Place, like Hargreaves Lansdown, are really suffering. Their share prices are well down. And so I think people are moving off these sort of expensive old platforms to some of the newer sort of neo-broker type plays. So that piece, definitely. I think what I'd love to see is more around, pensions, mortgages for older people, life insurance, these kind of areas. And it just takes time, and it's there's a company, Dead Happy, which was trying to change life insurance, which seemed to stop doing business this week. I think this illustrates how hard it is to break into some of these categories and find a great route to market.
Cool. Well, thank you so much, Rob. It's been a fascinating conversation, and I really appreciate your time. To everyone else listening, thank you very much, and I hope you've enjoyed the conversation and the insights. To hear more, to catch up on new episodes, and to kind of keep up with the latest trends in payments, follow our blog at primer.io and subscribe to this podcast. See you on the next episode.